So you
Yeah,
said at the
well,
start of this comment, you said you were a fully
tractable.
invested bear. Let's take this conversation a little bit further. Why fully invested if you've just gone through all the issues you've just gone through?
Well, because, the near-term outlook, the conditions that would lead to a big decline, like I said, is accelerating inflation. We don't have that there. Most importantly, we have a hostile Fed when you go into a bear market. We have a Fed that's extremely friendly. They tell you they're going to keep interest rates low, not only this year, but we're going to keep them low next year. Well, I'm assuming they're going to be surprised by inflation. It's going to be more intractable, and the market's going to be surprised because the Fed will raise rates sometime in 2022. They'll be forced by inflation. So that's my view.
You said that you're
the cyclical versus secular outlook.
Yes.
The long-term outlook. Let me explain. I got my MBA from Columbia Business School on January 31st of '67. I was broke. I had a student loan. I had a 6-month-old child who's now approaching 55. Okay, I had no money in the bank, and I couldn't afford a vacation. So I went to work the next day. I started my career at Goldman on February 1st of '67. The Dow was roughly 1,000. And in 1982, 14 years later, it was roughly 1,000. So I think we borrow for the future. I expect very little action from the S&P. Everything I look at would suggest to me caution, intermediate to longer term would be the rule of the day.
But Leon, how do you remain cautious if it's not bonds, right? If cash perhaps is losing value because of inflation, if equities perhaps have borrowed from the future, are you going more into Bitcoin?
No, I don't know. The only Bitcoin I own, let me just say this, on NFTs, Bitcoin, stuff like that, you talk to somebody else, because I tell people that I turned 78 a week ago, and basically I'm too old. I don't understand that stuff. It's crazy to me. It makes no sense. I own a little bit of gold, but compared to my net worth, I own very little.
Okay.
I'm basically a stock, a meat and potatoes guy. I'm a stock guy. So stocks make more sense than anything else because of Fed policy. But when the Fed policy changes, I think the market's going to have a response to that.
So when you say, though, that you've got your eye on the exit, what is your eye? How are you going to exit? What does that mean? Does it mean more cash?
Yeah, I would say, look, in a bear market, the winner is he who loses least wins. So, when the market goes down, I'm going to lose money. I'll be worth less. I understand that every asset has been inflated by monetary policy, every asset, whether it's real estate, et cetera, stocks, bonds for sure. I think the bubble is not so much the stock market. The bubble, I think, is the bond market. And I would say this, if that turns out to be wrong, I've had a negative view of bonds for quite a long time. But if that view turns out to be wrong, and interest rates belong where they are, you don't make double-digit returns in the stock market. I believe in the capital market line. What you earn in a bond has relevancy for what you should earn in the stock market. So bonds belong at 1.5%. You probably earn 4 or 5% a year in the stock market. But what I'm looking at for the exit are traditional things. I'm looking for change in Fed speak. I'm looking for change in the posture of the Fed. I'm looking for at inflation. I'm looking at gold. I'm looking at the overall economic activity. Let me say this. If I had to give you a list of positives and negatives, I'm more impressed by the negatives.